Hi, I'm João Kwanza. I build financial technology from Angola.
In 2018, Elon Musk paid exactly $0 in federal income tax while his wealth grew by $10 billion. He did it by pledging 92 million Tesla shares to Morgan Stanley for $513 million in tax-free cash. A secret Wall Street credit facility. The leaked IRS files that exposed the top 25 richest Americans, and the single tax loop that lets death erase billions in debt. How does Wall Street legally turn tens of billions in unrealized stock gains into tax-free spendable cash that is never taxed even after the billionaire dies? I spent months analyzing financial disclosures while building fintech infrastructure in Angola, and the answer comes down to 3 words: buy, borrow, die. In May 2019, Tesla stock was volatile and Musk needed liquidity without triggering a taxable event. If he sold $500 million in shares, California and federal capital gains taxes would swallow over $250 million in. So he walked into Morgan Stanley and Bank of America in New York. Instead of selling his stock, he pledged it as collateral for a securities-backed line of credit, known as SPLOC. Here's how the loan structure actually worked behind closed doors. The bank takes equity, sets a borrowing limit, and gives you liquid cash against your holding. Under Section 61 of the Internal Revenue Code, loan proceeds are not considered taxable income because you have an obligation to repay the lender. When I built payment flows into my white label trading engine Vargix, I saw this principle firsthand. Moving credit is never taxed. Only earned revenue is. By late 2020, Musk had pledged over 92 million shares to secure over $513 million in credit. Have you ever wondered why banks give billions to people who technically report zero income on paper? The bank charges an interest rate near SOFR plus 75 basis points, far lower than any personal loan you or I could ever access. He spent over $500 million in cash, yet on paper, his taxable income was less than zero. If borrowing isn't taxable income, where does the tax liability actually go? If you want to understand how these hidden Wall Street mechanisms actually operate, João Kwanza breaks down one of these financial engines every week. On June 8, 2021, an anonymous whistleblower leaked thousands of confidential IRS records to an investigative newsroom ProPublica in Washington, D.C. The records exposed that between 2014 and 2018, the 25 richest Americans saw their collective wealth grow by $401 billion. Yet they paid just $13.6 billion in federal income tax, a true tax rate of only 3.4%. To understand what this feels like on the factory floor, look at the contrast between the owner and the worker. Compare that to a middle-class worker paying 22% on an $85,000 salary, while the working family pays every single payday. The billionaire's wealth compounds untouched. Then, in 2022, the strategy hit a wall. As central banks raised interest rates, Tesla stock plunged 65%, vaporizing over $600 billion in market capitalization. What happens when the stock backing a $500 million personal line of credit crashes by 50% overnight? The banks issue margin calls, demanding immediate cash or forcing the liquidation of pledged shares. When Tesla stock plummeted 65% in 2022, hidden margin call thresholds threatened to force the largest liquidation in financial history. Now we arrive at the final piece of the machine, Section 14 of the Internal Revenue Code. How does a billionaire repay hundreds of millions in loans without ever paying income or capital gains tax. When an asset holder dies, Section 14 grants what tax attorneys call a step-up in basis. The cost basis of the stock resets from the original purchase price straight to the market value on the date of death. The estate sells a fraction of the stepped-up stock tax-free, pays off the bank loan in full, and passes the remaining billions to the heirs without a single dollar of income tax ever being charged. Building financial technology taught me that systems reward those who understand their rules. As Scripture reminds us in Proverbs 11, honest scales matter, yet human systems remain. Fundamental, yet human systems remain. The working class pays tax on what they earn. The ultra-rich borrow against what they own, and let death wipe the ledger clean. If you want real clarity on how money, technology, and systemic rules actually work, subscribe to Joel Kwanzaa for weekly breakdown.
I'll see you in the next one.